Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 20 and we're starting our review from Euro-Dollar pair with Jakub Novak. So first, let's have a look on 5-minute chart for analyzing transactions from March 17. When the pair tested 1.0624, the MACD line was already far from zero, so the downside potential was limited. Sometime later, there was another test, but this time the market signal was to buy, which resulted in a price increase of over 25 pips. No other signals appeared for the rest of the day. CPI data in the euro area strengthened investor confidence that the ECB will continue raising rates, not abandoning its hawkish stance. As such, many expect that after the release of Germany's Producer Price Index and Eurozone trade balance reports, ECB President Lagarde will give a speech in which she will reiterate the need to further fight inflation. That will prompt another rise in euro. In the afternoon, there are no important statistics scheduled to be released, so a reversal could occur. For long positions, buy euro when the quote reaches 1.0681 and take profit at the price of 1.0736. Further growth will continue the bull market. However, make sure that when buying, the MACD line is above zero, or is starting to rise from it. Euro can also be bought at 1.0636, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.0681 and 1.0736. For short positions, sell euro when the quote reaches 1.0636 and take profit at the price of 1.0580. Pressure will return if the ECB chief Christine Lagarde withdraws from her tough stance on monetary policy. However, when selling, make sure that the MACD line is under zero or is starting to move down from it. Euro can also be sold at 1.0681, but the MACD line should be in the overbought area, as only by that will the market reverse to 1.0636 and 1.0580. Gold, sweet gold. Trading plan for this commodity asset is presented by Dimitrios Tsapas. Let's have a look. Early in the European session, gold is trading around 90.75.94. At the openings this week's trading, gold opened around 1984 and made a new high, reaching 1990. Gold is currently making a technical correction, and it could reach the pivot point area of around 1961 in the next few hours. Gold could suffer a strong technical correction in the next few hours, and it could fall towards the support zone of 1961. The 21 SMA on the 1-hour chart and the weekly high of 29 January coincide at this level. The Federal Reserve will announce its decision on Wednesday. A rate hike of 25 basis points is widely expected. If the Fed raises interest rates above this level, this policy move is likely to cause a sharp fall in the gold price and could cover the gap left last week at around 1865. Conversely, if the Fed makes the decision as expected by analysts, gold could resume its bullish cycle and surpass the psychological level of $2,000. In the next few hours, we expect gold to fall towards the support zone of 1961-1958, which could give us an opportunity to buy with targets at 1975 and 1990. On the other hand, if it returns to 1985 levels, it could be considered a signal to sell because the 4-hour chart is showing extremely overbought signals. We've got a bearish downside momentum for GBP USD pair. Arif Makmur describes. USD CHF has been trading upside this morning, and we found the breakout of the triangle pattern in the background. Due to the breakout of the tight triangle in the background and the strong upside momentum, we see potential for the further upside movement. Upside objectives are set at the price of 0.9334 and 0.9383. Stochastic oscillator is showing fresh bull cross, which is another good sign for the further upside movement. Key support is set at the price of 0.9240. Petar Jakimowicz has fresh upside momentum for USD CHF pair. If we look at GBP USD 4-hour chart, we can see there are hidden deviations between price movements and the stochastic oscillator, which indicates that in the near future, pound sterling dollar pair has the potential to be corrected down to the 1.2084, 1.2064 area. But if it's on its way to the level suddenly reversed to rally up and break above 1.2269 level, this condition will automatically cancel the down decline scenario. At the end, here is Laurie Bailey with USD GPY pair forecast. On Friday, the yuan significantly strengthening by the 174 points, falling below the balance indicator line, thus strengthening the potential for further strengthening in its position against the US dollar. The Marlin oscillator is moving deeper into the negative zone. The nearest target is 130.95, which is the MACD indicator line. Overcoming this support will open the second target at 130.15. On the 4-hour chart, we can see that the bears are getting weaker. The price convergence with the Marlin oscillator is formed here. Climbing above the zero will increase the potential for growth. Afterwards, it's possible to surpass this resistance at 134.06, which is the embedded line of the price upper channel marked on the daily chart. That's all for today. See you online soon. Good luck.